Thank you all for your time today. My name's Franz Streiner. Quick bit of background. So I've been in the space since 2013, founder of Tokenized Capital. We've incubated, structured over $600 million worth of transactions in this industry. You may know some of our handiwork from doing the tokenomics and capital raise for Chainlink, Bancor, Salt Lending. Skipping forwards to about 18 months ago, we realized that the stablecoin sector is the fastest growing part of this DeFi ecosystem. Non-USD stablecoins and now real world assets and commodities are just an absolutely massive market, the biggest addressable. And nobody has built a dedicated decentralized clearing house and settlement facility, i.e. a DEX. So just going to quickly skip over, the addressable market is absolutely huge. The purpose is to be a nice, safe, boring place where you could dust off your stable coins and tokenized gold and get reliable, ethical yield on your assets for providing liquidity, or just simply swapping JPY to Swiss francs or Australian, New Zealand dollars, and gold and silver, so on and so forth. What's required is a complete overhaul of the concept of AMMs, Uniswap, Curve, Pancake, all of these different AMMs. Their bonding curve is not appropriate for commodities and FX. So we hired a group of quants and mathematicians to effectively rewrite the bonding curve to create something far more capital efficient. That's essentially the secret sauce. So the problem is that the core piece of infrastructure that real world asset providers and stablecoin issuers themselves are saying we need this to exist. Very similar to back in the day with ICANNs was created as a consortium because VeriSign had too much power. And so we created a dedicated piece of infrastructure for and from the market that wants to use it in the first place. So why now? Economic and the de-dollarization of the world is occurring. We're seeing a lot of people taking dollars out of bank accounts and turning them into tokens, stable coins, commodities. The growth is why now, effectively. And the technology has matured to the point where it's only really feasible to put something like stable together at the moment. Again, the addressable market is continuing to grow. This needs to be updated with 24 figures, but it's had a rampant uptick. The competitive landscape, DFX was hacked 3 times. Stabull Finance and Platypus are kind of hybrids with some KYC requirements. The features are going to be very simple. Effectively, you go to Stable to either swap currencies and commodities or to earn interest on currencies and commodities. We will simply become more and more capital efficient. So there's never going to be NFTs and lottery and other bells and whistles. We're only going to add more chains, more neobanks, more DeFi integrations, more pools for more assets to be swapped in our custom AMM. So we've built the platform. Security is number one. So we just finished a first round of quiet public testing, which identified no further critical bugs. And we're now gearing up towards going live with the 10-year liquidity mining program on the 1st of July. And token generation event at the end of July is the target. We also have a plan for progressive decentralization. We've partnered with Holochain. Their tech is fantastic. We can decentralize the DNS, the Postgres database, basically make this swap facility unstoppable. You can't take the website down or remove any humans. The project and the software will just continue to work. Partners range from decentralized Oracle providers like Gora.io, which is multi-chain, a sort of better version to the tech stacks available elsewhere. We have a range of stablecoin issuers, the New Zealand dollar, Singapore, Turkish lira, Swiss francs, so on and so forth. They're going to tell their clients, buy our product or use our product or get a yield of our product on Stabull.Finance. We also have a range of market makers, Binance Labs in-house market makers, Markets Now. That'll probably be the main one, and then Agua Now as a secondary market maker. We've had over 20 different exchange offers. We're working through something like 15 different launch pads to select which ones we go through. Our lead investor is a publicly listed company, 66 Capital, on this Toronto Stock Exchange. We also have Titan Block, of course, Tokenized Capital, and Type 3 Capital as investors. And we're just closing out the last of the pre-sale before we move to TGE. So any investors coming in now have a very short delta between buying a SAFT and having their first unlock. You get 33% unlocked of your SAFT on TGE, 1-month cliff, 2-year vest. It's only a tiny $2.25 million market cap. And yeah, we've kind of done this 35 times with clients, so we know what the recipe is, and especially for this market. It's also a project that doesn't need to add, hundreds of humans to scale. Like our friends over at Tether, we could be highly profitable and scale with a minimal amount of additional resources added. All the future funding, any additional SAFs that are signed now, basically going towards more KOLs, more liquidity, more promotions, marketing, brand awareness, so on and so forth, because we already have our resources and our strategic investors. The business model's all on chain. Basically 20% of all the swaps go towards what's called protocol-owned liquidity. And so just a simple little table, we're going to be highly competitive with our swap fees. If we're doing $10 million in daily trading volume, that's generating about $20,000 revenues, 70% of which buy the token off the market and then put it back into the liquidity mining program. 5% goes to insurance, and these ratios and percentages token holders will be able to vote on. So every 3 months, you'll be able to vote how much interest rates goes to which pools. Maybe some people want to accumulate the tokens so that they increase the yield on their gold pool or their Swiss franc pool, and users will also be able to vote on the ratios, the change of how much of the network protocols go towards insurance, buy and burn, putting back into the liquidity program, so on and so forth. So we've really deeply thought about the tokenomics to create and avoid sell pressure and other problems that we've seen in various different tokenomics over time. I'm not going to get into the details of liquidity mining, but 30% of all the tokens are locked into effectively a long-term 10-year liquidity mining program. And yeah, we're just getting started. So that's pretty much the elevator pitch.